In this video, I want to go over for you guys the 3 strategies that I'm going to be using to make millions into the end of this bull run. Now, 2 of the strategies I actually haven't really spoken about publicly. They're new strategies that I've been refining over the past few months, and it's actually some really exciting stuff that you guys are going to learn, because I'm going to basically break down how these new strategies work so that you can actually go on and implement them today. The 100x scanner one is maybe less usable by you today because it involves a lot of AI and automation, but the boring strategy and the rev maxing strategy are ones that you can absolutely implement yourself after watching this video, and they can actually make you a lot of money. So the next phase of the bull run is about to begin. We have the Fed set to cut rates in this next Fed meeting on the 16th of September. We have gold rallying past all-time highs. It's just pumping. We have Trump staying strong to his game plan of running the economy hot. And we have stocks, new all-time highs, and the Russell index is also getting close to an all-time high. And the Russell index is typically the risk sentiment for crypto. If the Russell is rallying really well and performing well, crypto is doing well. We also have the crypto total market cap minus Bitcoin and ETH chart looking really good, about to break all-time highs. And the others chart is also looking really strong. So there's 2 strategies that I've been refining over the past few months that I'm going to be using to make a bunch of money, and I'm going to explain to you how they work. So strategy number 1 is the rev maxing strategy. I'm going to break down how I created this strategy and why I wasn't using this sooner. So in January 2025, I bought a large position in Hype, and I sold it actually a month later. So I bought it in this red box and I sold it over here about a month later. And the reason I sold it was because it broke this critical support level right here. It was invalidated based on the chart. And now Hype's been pumping and I didn't buy back in. So that was a pretty painful lesson. I learned a lot from this. You know, some of the things I learned was that unless you're going to be buying a coin at peak fear or capitulation, or when Bitcoin's just crashing and people are scared, you should expect your position to probably go lower than when you've bought. You either buy it at the bottom when it hurts, or you buy it when it doesn't hurt and it hurts because it goes lower, right? You have to choose a pain. And I just had that lesson reconfirmed for me when I bought Hype. I bought it obviously at a good price, but it wasn't, you know, during the Hype capitulation, the period of time when you want to buy it. Also, I learned that with Hype, I had a thesis about the importance of buying coins that have revenue and the importance of buying coins that return that revenue to token holders by doing buybacks. And, you know, I had this whole thesis of how Hype's revenue was going to go parabolic and everything was looking good for Hype from a fundamentals perspective. I was fully correct. Everything I said played out. But I let price action invalidate this, where even though I was like right on the thesis, I let the price close that position for me. And that's why having a good entry system where you're entering at a good time and you're understanding what could happen from your entry point helps massively with position management. And so I've learned from this mistake. And when Pump launched, I realized that this is like a Hype 2.0, and I've decided to try the same strategy I did with Hype, but with a bit of a new approach. And so what I ended up doing was I bought a bunch of Pump here at a 1.1 billion market cap, and I held it. And this photo is a bit old, but Pump is now at a 2 billion market cap. So I'm almost up 2x. And I followed the exact same strategy that I did with Hype. The strategy is basically bidding the largest revenue producing protocols and apps that place token holders as their number 1 priority during peak fear and near the Bitcoin bottom. Okay, that's the strategy, to sum it up in one sentence. Pump went down 20% from my entry, sort of like Hype did. You can see I bought it around here. It went lower. It went down to like an 800 million market cap from 1.1 bill. But I still held. It didn't hurt at all. It wasn't a problem because I knew now the context of what I was buying and when I was buying it. I was buying Pump because it was hated across the market, but it was still a massively revenue producing protocol with an incredible team. And that's the strategy. Buy revenue producing protocols with an amazing team when everyone hates them. Now Pump's up 2x, one of the best performing tokens in the top 100 from that period of time. And this validates the new strategy that I'm going to be teaching you, that I'm going to be using going forward. Okay, so how do you implement this strategy yourself? Step number 1, you got to figure out what protocols are making revenue. So you can just type in the Google like top revenue producing protocols, and you can see it lists them here. This is DeFi Llama, Hype and Pump, number 3 and 4. There's also a number of other ones that I honestly haven't heard of. You need Edge to know what these are. Axiom, obviously trading out. But yeah, you can see Hype and Pump, the top 2 revenue producing protocols. Step 2 is you have to analyze the tokenomics. So if there's a coin that makes 100 million a year, but they're not giving any of it back to token holders through buybacks, then probably not something worth buying. It probably doesn't have its tokenomics structured very well. So you have to ask yourself, what percent is used for buybacks? What is the growth potential of the revenue? Are they maxed out? Are they capped out? Or do they have more to grow? Like, what new products are they building? Are they branching into new verticals? Do they have partnerships to increase their revenue? For example, right, in Phantom Wallet, you can use Hyperliquid perps. So that's a new revenue source for Hyperliquid. So there's all different things like that projects do to expand their revenue, vertical integrations and partnerships. Is their revenue trending up or down? And do they have any major unlocks coming? So for Pump, I can't remember the date, but they don't have any unlocks till next year, I'm pretty sure. And you can see here, Pump has bought 6% of the circulating supply. And that's only in like the past, I don't even know, month or two, right? Whenever they launched the token. Okay, so that's $84 million they've bought. In the past week, they've been buying back 100% of the revenue they make, or sometimes more than 100% of revenue they make into the token. So you start to see why it's important, okay? Step number 3 is you wait for the market consensus on the coin to become extremely negative. So this is pretty easy. Like, it's easy to tell when everyone hates a token. Literally every single person on Twitter hated Pump back in July. It was like the most hated coin ever. And you know how much a coin has in terms of upside based on how much people hate it, right? So Pump's now at a 2 billion market cap, right? It was at 1. What's the upside? Well, I think if you look at how hated it was, you can see that it's like pulling back a slingshot, right? If I pull back a slingshot really fucking hard, like what happened with Pump, where it was literally like the most hated thing ever, the further you pull it back, the further it goes the up when you let it go. So if Pump goes all the way down to 800 million, it probably should have only gone to like 1.6 billion. So it can go significantly higher because it went significantly lower than it should have, if that makes sense. It's a bit of a reflexivity concept there. And then step 4 is you bid and you hold through to volatility. Holding through to volatility is the thing that I messed up in all these other steps. So really important you do this step. So why does this strategy work? Why is it working for me now? Well, one of the things that you have to do as an investor in crypto or in stocks or anything is to bet on the best teams. You always want to bet on the best teams because a company, a project, a protocol is just the people behind it. And so if a team is making $100 million a year in revenue, 50 million, 200 million, whatever it is, that's a team that's making a lot of money. A team is only going to be able to make 100 million a year in crypto if it's a good team. So this whole filtering for investing in the best teams thing is pretty easy when you just buy the tokens of the projects that are making 100 million a year or more. There's no universe where a shit team is just going to make 100 million a year in rev. Doesn't work. You have to be a pretty fucking good team. So you're naturally going to be bidding the winning teams if you buy these coins. Number 2 is the winners tend to continue to win. So when you invest in, let's say, Pump instead of Bonk, you're betting on a better team, right? The Pump team is significantly better than the Bonk team. Bonk team is very mid. So because the Pump team is significantly better, you buy Pump when everyone thinks Bonk is the winner because they did a vampire attack sort of on Pump and they had all the market share. You're buying, at that period of time, if you buy Pump, you're buying the winning team. And you're betting that even though short-term Bonk is winning, long-term the better team will win because upside surprises always come from winning teams because they build quicker than the market can expect. They innovate quicker and better than the market can expect. And these upside surprises in performance, in how they build, in revenue, and all these things lead to continued dominance. And also, revenue generating coins tend to lead the market at the beginning of a new uptrend as buybacks push a thin ask side order book up. So basically, when we had the last market rally, Hyperliquid was like one of the first things that was performing really well. And now this market bottom, we now have Pump leading and also Hyperliquid's performing good again too. And why that happens is because when an uptrend begins, it's often not beginning because there's a lot of buyers. It's often happening because people have just stopped selling. And when there's no one to sell, when the sell side order books get very light, buybacks are able to impact the market a lot more significantly than when the coin is in a downtrend, right? If a coin's in a downtrend and there's a lot of selling pressure, buybacks don't really do anything. But if the coin's bottomed and there's no one really left to sell, buybacks are really, really impactful because there's not much on the other side of the order book. It's just like a TWAP. It just pushes the price up. And that's why we notice with Hype and Pump, they're going to lead the market at bottoms because they have buybacks and that's naturally like a buyer who's pushing price up really fast, okay? Also, when the market is scared and bearish, people tend to collect into the safe coins, the ones that have revenue, that have users that are proven, trustworthy, genuine. And then when the uptrend gets later into its sort of trend and you're getting towards like the crazy phase, that's when people move to the speculative positions. They're buying dog shit coins, they're buying the most worst coins in the market because at that period of time, money's sloshing around, people are euphoric, people are willing to take risks. They don't want to just buy the safe revenue producing protocol. They want to bet on the next 1000x meme coin, okay? And that's when it shifts away from pump and hyperliquid type coins into the risky ones. And so that's, to explain the advantages and disadvantages. Buying something like pump or hyperliquid or whatever it is that generates a lot of revenue and puts a lot of it into buying the token during peak fear is as close as you can get to like guaranteed money, in my opinion, because you have a buyer of last resort and there's no one left to sell and it's still making a lot of money. So it's like, how could that coin go lower? You have a very, very asymmetric risk return profile when you're buying at those periods of time, those type of coins. Now, a disadvantage is obviously, it's still hyper volatile. Timing of entries is important. It's a difficult skill. So that's a disadvantage with this strategy. An advantage with this strategy is it's simple, low time investment to process. It's very easy to determine what a top revenue producing coin is. It's very simple. Disadvantage, if the revenue drops off, buybacks are not really going to help price. The coin might not do well. Another advantage is generally, like I said, they outperform early in an uptrend, so you're making more money quicker. You can compound into the risky coins. They tend to underperform later stages, disadvantage. Now let's talk about the second strategy. This one is super interesting, and I don't know anyone else who does this. So if anyone is building something like this, DM me. I want to talk to you because this is interesting stuff. Kita launched out of 3 million market cap, give or take, on base, and it went like 200x or more, which is fucking crazy. And the whole time, if you knew this coin early, you could have seen the ex-Google CEO was an investor and advisor. Imagine a 3 million market cap coin where the ex-Google CEO was an investor and an advisor. That's like a no-brainer play. Like that's free money, but I didn't know about it at the time, so I didn't catch it. It wasn't just KTA, there's like 50 plus base coins that were really obvious in hindsight. There was obvious characteristics of the coin that made it an obvious bid, if only you just knew about the coin at the time that it launched. So I began thinking, if only I had an AI scanning tool that could find these coins when they launch, if only I had an AI that knew my whole investing framework so that it could basically take it and follow a predetermined filtering system to know exactly what to look for and exactly what to tell me about. And that's basically what I'm building. I'm building me that's going to scan the base trenches to try to find these coins when they launch. So hundreds of new coins launch a day. Very few are worth looking into. And so my AI scanner is going to have like multiple levels of filtering. And when the final filter is passed, it'll submit a research report on the token, and then we obviously look into it. So here's the steps. So the idea is that this AI would remove memes, scams, and coins that are already too big, so you don't waste any compute, any money on scanning those tokens. I basically have a criteria list that I'm going to be asking the AI to basically research. So if there's any ex-Coinbase employees, that's a bonus. If there's any particular high-level VCs, like the ex-Google thing, if there's a founder or team members with prior experience in crypto to 2016, or it could even be something like, did anyone on the team build any crazy projects in the past, right? Just scanning for those particular criteria that make you go, oh, this is something worth looking into. If a certain amount of criteria is met, then it gets a research report. Once we have the research report, I have a research team, which consists of about 25 analysts, and it's growing as we go along. If you're a very high-level researcher, analyst, feel free to DM me, you can apply to join. But yeah, we basically go through these coins. So we look at them and we just check two main things. Is the AI like full of shit, or is what it's saying actually correct? And basically applying pattern recognition, because a really good analyst can determine a good coin from a bad coin in like 5 minutes. So it's applying that pattern recognition that only a human has. And then I review it, my team reviews it. If it passes all the tests, we begin the accumulation phase. So with this strategy, I'm going to outline for you, because I'm very friendly, I'm going to outline for you the whole risk management, position sizing plan that I have at the moment. It might change, but this is what I've got right now, okay? So with a strategy like this, the coins are newer and they're smaller market cap. So there's quite a bit of risk that you get zeroed out. The risk is higher, but the reward's also higher because Kita went 200x, right? If you're buying a brand new coin at a 2 million market cap, it's got a bit more upside than buying Mamo at 30 million, right? There's also a larger sample of coins that probably meet the criteria. And because it's new, there's only so much you can know about the coins, so there's going to be less conviction. And so because of all these variables, this is the strategy that I think I'll be following. So I'd be buying and managing 10 to 20 positions at any given time. I'll be accumulating within maximum 1 to 2 week time frame of determining that the coin is good. So if on the 1st of November, I think a coin's good, by the 14th of November, I would have bought a position. I would be buying into uptrends if it's early enough, if it seems asymmetric enough, but also I'd be looking to buy into like 30 to 50% declines and then setting alerts because it moves very fast. So as soon as you get alerted, buy in. I wouldn't be doing any stop loss, probably wouldn't be doing any downside position management. I'd view it as like a 0 or 100x position. I mean, look, if a coin, after we buy it, we find out it's shit, we'd obviously sell it, but likely just holding. And then when it goes 2 to 4x, take initials and then let the rest run. And over time, reassessing conviction as the project continues progressing and going up, okay? So you can see when Keto launched, it had a 73% decline, a 70% decline, and a 40% decline in the space of a week, which is like pretty crazy to me. Like it's very volatile. And then you can see Memo here, 30%, 30%, 20%, okay? So not as many declines before it went up a lot. And on Clanker, we had an 80% decline and then a 40% decline. So you can see here that you often get given entries, but these entries are very short-lived. So you need to basically be moving fast, okay? So that's an explanation of the strategy. Just so you're aware, these strategies I give to all the members of my mastermind. So it comes in the form of easy to follow hands-off signals. I'm buying this, I'm buying that. I give one-on-one portfolio guidance and we build an exact plan. Well, I build an exact plan one-on-one with every member who joins to navigate the bull run correctly. And you're basically following alongside the exact moves of the pros, okay? That's just to let you know if you'd like to actually follow these strategies alongside me, you can do that inside of the mastermind. There's a website here. You can send in an application. If you want to do it yourself, you can probably take the information I just gave you and do that. But if you'd rather just follow the professional, then you can do that as well. The last strategy is the boring strategy. Don't really want to talk too much about this one, but it's the Hunter algorithm. I've been talking about it for years on my channel. Very simple. It sends signals to buy, and then you buy, and then you hold, right? And then you sell when it says to sell. Pretty simple. This is also a part of the mastermind. This is my more like long-term boring strategy that I follow for the Bitcoin part of my portfolio, which is pretty large. So yeah, that's pretty much the video, guys. Thank you for watching. Again, if you are a research heavy in the trenches person and you feel like you'd be good to be a part of the team, feel free to DM me on Telegram. I'm sure you can find a way to find my contact. If you are building something like I'm building here with the AI scanning system and you want to discuss things and collaborate, DM me. If you want to just follow the strategies, the mastermind. Thank you guys for watching. See you in the next video. Cheers.